The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the November 19th, wonderful Wednesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that each of you are off to a great start of your day. Let's make sure that you and I, that we do all that we can do to have a wonderful Wednesday. And, of course, we should always remember that what's dreamed about, well, that is... what's dreamed about is really what's talked about, right? And what's envisioned, that becomes exciting. Of course, what's planned, that becomes possible. What's scheduled, folks, that is reality. And I do appreciate you scheduling some time with me here this morning. I am grateful for your presence. I'm here to serve you. That means our call-in number is 877-927-6648. And the best way for me to serve you is to give me a call. Internationally, you can reach out at 727-445-1044. Remember, if you've got a question, somebody else has that same question. So don't do it for me. Don't do it for you. Do it for someone else. A random act of kindness. That is the way to live. It is Wonderful Wednesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. We got red arrows out here. I must be seeing things, am I not? The Dow is off 45 points. She's trading at 17,641. Looks like a crash to me. The S&P down 8 points, trading out at 2,043. The composite down 31, trading at 4671. The Russell 2000 off 8, trading at 1161. The FTSE's up. FTSE's down 20 points. The DAX is up 20 points out here. Gold's off $1.80. Silver's up 10 cents. Light sweet crude is flat out here, trading at 74.69. Moving to the upside in this market out here, Agios Pharmaceuticals up $8. Receptos Inc. up 7, Zillow up about 6, Dish Network up 4, Target up 3, Stage Stores up $3, Lowe's up $3, Jack in the Box up $3, Tesla to the downside, lead the charge off $11, Priceline down $9, Google off 4, Malin Publications down $4, LinkedIn off 4, Synchronous Technologies down about $3.60, Splunk down $2.75 out here. Again, our call number 877-927-6648. Let's go check out these markets here. Let's where do we want to start? Let's go start with the or do we want to start here? Let's go start with Let's go start with the ETFs. Get such a choice to start from. Let's start with the QQQ, down 77 cents as we speak right now. So what do we know about the Qs as we speak? Number one, the Qs yesterday had broken just slightly above its 1.272 expansion of its last major set of swing points. Those swing points being the trading session here from September the 9th down to the low out here. Well, really, I guess you could use September 9th. You could also use September 19th. They're both about the same. Probably should use the 19th. So we'll say from the 19th down to the October the 15th out here, right in that 103 type area. Price got above that yesterday. If price can stay above that area, then what we'll see is the Qs move up to the 107-ish range. What do we have at 107? You've got a 1.6 million expansion. You've got a 1 to 1A to B equals CD. That is confirmed because the B point has been passed with volume. That B point being September 19th, that had 46 million. September the 9th had 36 million. But September the 19th, that had 46 million, and that was passed with 54 million shares on October the 31st out there. A little bit of a bear sash candle that is formed as we speak. Thus far, we'll see if, in fact, that holds throughout the trading session out here. Volume so far, 5.2 million shares. That would be to the downside because it has not made a new high. Yesterday it was 26 million shares to the upside. So we are seeing volume accelerate through the day. The question is it going to make a higher high, or is this going to simply be the beginning of a retracement out here? That I do not know, but we'll find out. That's what's going on inside of the Qs. Let's go take a look at the Dow Diamonds out here. 46 cents as we speak right now. now. What do we know about the Dow? The Dow here, really, if we take a look at expansions of swing points, that would be the September 19th level down to the low on October 15th. Yesterday, what it did was almost the exact 1.272 expansion out here. Pretty amazing. 177.38 is what it hit. 177.41. How did Leonardo da Pisa de Fibonacci come up with this stuff? I know it was because he was watching rabbits do their thing out there, and alas, came the summation index out here. If we do take a look at that, so a normal resting spot. In fact, the Dow Diamonds only need to get to 178.47 to complete the 1-to-1 A to B equals CD to the upside out here. Yesterday, volume, all-time high out here was 4.7 million shares. Already a million shares, though, this morning, and you have to say the million shares to the downside, no newer high out there. So we've got some decent volume inside of the ETF structures as we speak right now. Let's go take a look at the SPYs out here, up 90 cents as we speak. What do the SPYs do? What do we know about the SPYs? Let's go take a look at their expansion of swing points from the September 19th area down to the low. So we know the when we know that the diamonds and the Qs have hit their 1.272 expansion, but the SPYs have not. As Colonel Klink would say, very interesting out here. That 1.272 expansion would be 207. What do we have inside the SPYs today? The SPYs have nothing more than an inside day as we speak. They've not pierced the low. The low yesterday was 204.44. So far, the inter-session low has been 204.56. An inside day means nothing. We got to wait to see what it actually does. Volume today, 16 million shares after yesterday doing 76. So we do have some volume, at least in the early portion of the session. Of course, we know the first hour of the day gets more volume than several other hours, other than maybe going into the close, the last 30 minutes out here. So the SPY not really providing you with a ton of information. We could say that the ES Mini, that would be a different story. It's trading at 2,040. You get below 2,039.25, that becomes a different piece of information the SPY itself would not offer. If we go take a look at the IWM out here, the IWM right now trading off a buck. She's trading at 115. The IWM, we covered this in great detail yesterday, is the one that's given the strongest of sell signals out here. However, yesterday was moving into a swing point. That was the November 13th level. That only had 25 million shares. Yesterday pushed up into a 33 million shares out there. As we speak right now, it is back below the September 3rd swing point, where we look at September 19th. In the other ETFs, meaning the IWM, SPYs, and Qs, in the IWM, it is September 3rd. That becomes our benchmark out here. And it is back below that low. That swing also had 33 million shares. Yesterday, moved up with 33 million shares. So moving in with the same thing. At this stage, what we know about the IWM, this is going to be a key level to be watching throughout the day. There was a bit of a gap that was formed out here going into October 31st, right? That was the big day. The Japanese said, hey, we got the printing presses fired up out here. Well, that printing press firing up communique, that memo got to the IWM. The IWM gapped up. When you gap up, it did it with 53 million shares. It moved higher. That's accelerated volume. It is somewhat wide price spread as well, especially if you take a look at the close of the session from October 30th. What that really sets up is that sets up a gap. Here's where gaps become your friend, because the gaps have really two different levels of support on the way up. The first level of support is really going to be the low of the session that it gapped up. That's October 31st. Well, that level here was tested. We've seen it close below that on 2 occasions, so it really becomes support level number 2. That's the level that it's trading into right now. 115.38 is the number. You're trading at 115.31. You close back below that area. Now, this is going to be the second day, or the second time period, I should say, second day, really, same thing. Second day since October 31st, that level was going to be tested. We saw it tested on November the 4th with 37 million shares. Remember, that's 37 benchmarking 53. Today, you've done 7.6 million shares in 45 minutes of trading out here. If you see it close today back above 115.38, it's an absolute, it's only the second test, though. It's an absolute indication that its work to the upside is not done. That's what I would be paying attention to, because the IWM is the 4 ETFs. It's the one that is the weakest out here. If the weakest gives you a sign that it's not ready to bust them to the downside, it's got to make you say, something to think about. On the other hand, you close below 115.38. You're 115.39 right now, by the way. You close below that, then that window will have been repaired, and it no longer acts as a level of support. What do you do next? Excellent question. Thanks so much for asking. What you do next is then you start going down to your Fibonacci retracement ruler, and you go from the low to the high being out here on November 13th, the low being October the 15th, and that says your next target area becomes 112.63. So that is what's going on inside of the 4 ETFs that represent the indices out here. Let's take a look at a couple of sectors inside of the S&P 500. Let's go take a look at the XLK, the numero uno ETF here. That's number 1 weighting structure. Now, in the case of the XLK, it's got a bearish engulfing candle. We have not seen a bearish reversal signal, not a single solitary bearish reversal signal coming off of the low from October 15th. Could today be the day? I don't know the answer to that. There is no real completed pattern up here other than maybe an expansion of a set of swing points out here. The level of support, where's the first target area for support? Well, you have to say it can fall back to the gap from October 31st. We were just looking at the same thing with the IWM versus the, now we're looking at the XLK. We could have done the same thing with the SPY and so forth, but we're doing it now here with the XLK. The XLK first level of support becomes 39.59 out there. So we'll see. So pretty amazing, pretty beautiful looking move to the upside off of those lows out there. Very first day where they say potential for any kind of bearish reversal signal inside of the technology sector, the number 1 weighting structure inside the S&P 500. I believe the XLF, maybe number 2. It's jostling for position out here, the XLF and the XLV, the healthcare sector. Nonetheless, let's go take a look at the XLF. What do we got out here, the XLF? Today, just somewhat of a sideways move. The XLF has been consolidating ever since October not since October 31st. The consolidation, this really began on November the 5th. Kind of a very narrow trading range. The low there at 23.96. The top was about the 24.31 level. Pulling back a bit this morning, hasn't pushed higher, so it's pushed a little bit lower. 3.8 million shares. Yesterday made a move higher with 12.6 million shares. So you've got some volume inside of the XLF, but nonetheless, it has not fallen apart as we speak right now. So that's the number 2 weighting structure inside the 2 or 3. XLV, let's go take a look at it. It's off 45 cents as we speak. No reversal signal here. The XLV trying to complete its 1-to-1 A to B equals CD. That's the 1-to-1 coming off of the the April 14th area. Not even the February, the April 5th, April 14th area. That's your A point. That A point, by the way, is priced out at 55.39. Your B point all the way up here on September 24th inside the XLV makes a 618 retracement. Does that on October 15th. 1-to-1 A to B equals CD 69.08. Yesterday got up to a price level of 68.72. Fairly close. No reversal signal as we speak right now. That is nothing more than the pause button inside of the healthcare sector. That's called a bearish heterami. And some people think that's a reversal candle out there. Really? Where'd that come from? This is Steve Rhodes. This is TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive The Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 39, S&P down 7, Russell off 9 points out here. Now, as we went into the close of the first hour of the Trader's Edge show, one of the charts that we were paying attention to was the 120-minute time frame chart here for the NQ. We've indicated that the 42.16 area, I believe that's the number, is the spot that we want to really be paying attention to. It's a moving average line. Now, this is a 2-hour chart, so we're in that 2 hours. It does not end until 12 noon, so a lot of time here to play out. But it is a level that we want to watch, and the reason is because this level has not been broken. We've not seen a close below it for 2 trading sessions in a row ever since that October low out there. So at this stage, we're just seeing a level of support that is being tested inside of the marketplace. So that's one area, and the other area is the level of 2,039.25 to be exact. Not that I like to be exact. Being exact is a good thing. inside of the ES Mini. You're trading at 2,042 as we speak. Looks like it hit that same moving average line, and just simply, which is at the 2,039, 2,040 level, and just simply bounced off of that as we speak right now. But again, it's a 2-hour chart, so a lot of time left in the trading area. Trading day, clearly. Now, some things to be concerned about. We looked at it in short. Now, if you're watching us on Tiger TV, how cool is it what Tom and the crew have done? You're watching this in HD. You can see really all the charts. We'll expand it. We'll look at these 3 charts out here. The first one being the New York Stock Exchange. Now, today is the first day that we are seeing. Now, this intraday, it's only 10:26, so we got a lot of time left in the trading session. What we are seeing here is we are seeing a piercing of that price oscillator zero line. You're down to minus 24.02. When you get down there, the summation index begins to turn to the downside. That is your first indication of a potential change in trend inside the marketplace. Got to wait till the end of the day to see what actually happens out here. Now, what we do know is that we utilize this same tool to help us identify that a bottom was forming out here. Why? Because we saw higher lows inside of its price oscillator. We know going back to 1995 and even beyond that inside the New York Stock Exchange that when we saw that situation occur, that it always led to at minimum of a bounce, sometimes a significant bottom. In this case here, just simply the timing of October when it puts in significant bottoms. That's really what its message was and still is to this day. Now, lost its energy. October 31st was the last gasp. Not the last gasp like that's it, it's over with, the sky's falling, the top is in. It just was like running a huge race out there on October 31st. In fact, what we actually had was you had a rising price oscillator. That's the indication of an initiation move, not the indication of an exhaustion move out there. Subtle difference, but very important difference. Now, because of that big move, we saw that it was losing strength under the covers out here. And now today, if in fact we were to see a close like this, I don't remember the exact number, but it's around 8 something, 9 something as far as net declining issues, the price oscillator will be below zero. That's where you start to see changes in trend that take place. What does that mean? That means you start to see the market maybe move back, consolidate a bit more out here, and then your next real go, your next real buy out here, you can be just a little late in the game. Will be as soon as the price oscillator gets back above zero. Now, I'm not talking that it's below today, above tomorrow kind of a thing out here. But right now, today, that's what's going on inside the wider swath of the marketplace. Now, you can see no real price damage. If I pull this back, we take a look at the candle out here. It's just an inside day. What's an inside day mean? Means that the bar is traveling inside yesterday's candle session. Hasn't taken out the high, hasn't taken out the low. The low of yesterday inside the NYSE happens to be priced out at 10,896. The low today, 10,901. Inside day, if that's all that really took place today, inside day says the trend that it currently was in continues. That's the meaning of an inside day, whether it's to the upside or to the downside out here. A lot of time left in the trading session. We're going to be paying attention to the potential trouble in River City. Now, the New York Stock Exchange has a price oscillator. Its summation index turning down. The composite has the same thing. Now, it had turned down 2 days ago. Yesterday, it turned back up. So the composite can't make up its mind. Nonetheless, it's got that same kind of pattern out here. Same kind of pattern, the same exact pattern, where it was making higher highs, an initiation move inside the market. That's what the real sign of that was. That's what we saw here. That's why these markets are going to move higher through the end of the year. We're just looking for potentially a retracement, a nice little ability to be able to buy, and then the markets move higher through the end of the year. They probably move higher beyond the end of the year as well, but at least right now into the December 31st level. This much I've got conviction in. The New York Stock Exchange, the Dow, the S&P, the NASDAQ, they'll all be higher in price than where we're at today on December 31st. This is Steve Rhodes. This is TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We've got the, multitasking out here. Shouldn't do that while you're on live radio. The Dow's off 43 points out here. You got natural gas truly on the move. Of course, I was multitasking because I was trying to find something to be able to share with you. So I suppose that's okay. That's allowable, right? Now, if we go take a look at the natural gas, let me switch over. Yeah, we got the January 2015 contract up. So we'll put that up on the screen here. Now, we've seen, obviously, a frigid beginning of winter, and we haven't even begun winter. We're still in fall, are we not? we take a look at natural gas right now, it's taking on the B point, the swing point, which is the trading session here from November the 10th out here. And somebody says, oh, it's winter now. No, I don't think winter has actually officially started. If we take a look at the B point out here, November the 10th, that swing point high is $4.63 out here. You're at $4.59. So the top of that's going to be tested. I suggest that B point is going to be taken out. Not necessarily today, but it's going to be taken out, and we're going to see a move. Takes natural gas, at least this contract, back into the $5 level. Now at the $5, we'll just call it $5 even. You can see right back here, that's the last high that took place back in June of this year. We can see that level has acted as a resistance across the board right around that $5 range out here. It was a level that was achieved back in February 2014, again back in April really, the end of April 2000, and then again in June. So that's really your line of demarcation from a pricing standpoint. However, the way, and I'll be teaching this in my course this coming Saturday, and then for 7 weeks, then the follow-up course on January 9th out there. So I'll be sharing with you the real nuances here. This pattern, they say A to B equals CD pattern, suggests that high of $5.02 is going to be taken out, and we'll likely see a move up to the $5.22 range out there. Now, just like the S&P 500 has a seasonal pattern, so too does natural gas. This is actually, I was just looking for a chart. This was included in one of my newsletter updates for my clients when we were scaling into a position inside of UNG. So we began a scaled-in position, and one of the things that we were using here, this is the seasonal chart. This chart here goes back, it goes back a long ways. I can't remember exactly when. I had the date open a while, but it's a lot of years. It's not the 43-year time period that I use for the S&P 500, but it's plenty of data back here. Don't be paying attention to the price along the left side. I should have really just got rid of that because that's irrelevant. It's really a directional thing that we have inside of the market. Now, typically, natural gas makes its low the end of August, the early part of September. It did not do that this year. And what we typically see is a spike up into the October time frame, one little brief pullback out here, and then it moves higher. So everything kind of shifted to the right out here. And in essence, when you take a look at this pattern that's in play out here, number one, you can see into the December. Now, what natural gas ought to do is peak sometime. What it has done historically, it's peaked in the December time frame out here, the early part of December, sort of November 19th. So natural gas ought to run between now and that time period. Now, things have shifted just a tad out here. But this suggests to me, number one, you can see the high that's formed back here in the June time frame if you're watching this on Tiger TV, and you get to see this so close. You can see in this stage here, I wrote, this was on November 11th, it's above his historical seasonal pattern average by day. Oh, for the last 11 years, I've got it written in there. So by the last 11 years, and should natural gas continue its move higher, the target exit area will be $5. $4.98 is what I put the equivalent of its June highs. Well, you see, when I wrote that, we didn't have the information of how this pattern here was playing out, the A to B equals CD pattern. The C point, the retracement, really right back to that 0.618 area back in November 14th. Well, now we've got new information. That new information says, that $4.97, $5 area should get hit. We'll have to continue to monitor this, but it looks to me like it actually goes higher than that, and that's in the case of natural gas. Right now, trading out at about $4.56 out there. That is the commodity that is on the move as we speak this morning. Gold is back now $10. So gold trading out at $11.87. Silver is up 7 pennies. We've seen a bit of weakness here, just a bit of weakness inside the euro. So the U.S. dollar index up 9 cents. Really not that big of a deal. I think the down move here in gold would be a little bit overplayed. Let's go take a look at gold. Nonetheless, see what it's doing out here. Yesterday, getting close, but no cigar, up to its 0.618 retracement level, 1207. So gold is off of the bottom out here, and any kind of retracement you want to be looking to be able to buy retracements inside the shiny metal out here. Where could price pull back to? Inside of gold, probably best to actually go down to an intraday chart out here. I was looking for maybe... Can I do this? How quickly can I do this? Let me try this new chart. Z4. Let me try this right here. It's going to be a little bit easier maybe to draw these patterns if I can do this. Equals 1. Yeah, okay, good. So we're there. Let me get down to a little short-term time frame out here so we can go check out the patterns. Let's go take a look at, see if I can punch this up with a 30-minute pattern. So you've got 1186.70 is where it's trading at, and no, it's not going to participate with me. Let's try to refresh. There we go. Okay. So now let's pull this over. Let's go take a look at any kind of, so I've got 30-minute chart. Just going to see if we've got any kind of maybe Gartley pattern that could set up here for you inside of gold. So we take a look at the current contract. Let's come from the, this is a 30-minute chart, by the way, that we're looking at. Let's come from the lows out here at about 9 o'clock in the morning on November 14th, all the way to the highs out here. That took place. We had a nice volume bar at 5:30 on November 18th, 5:30 morning. That was yesterday. Now what we're looking at is a potential A to B equals CD to the downside. That A point out here at the highs at 11, what is that price point? I'm sorry, 1204.10. Your B point down here is at 1191.10. Your C point out here at about the time frame here by 6:30 this morning. If we take a look at it's made the, oops, come on, there you go. It's made the 1 to 1.272, almost exactly. A to B equals C to the downside, 1185.40. But this is a 30-minute chart, and volume has picked up to the downside. So, you know, it's come into that area, kind of a wide-ranging bar, which suggests to me that the price ought to move down to about the 1181 area. 1181, you're at your 0.382 retracement. You're at your 1 to 1.618. A to B equals CD. So the work inside of Goldilocks, you know, maybe it has a little bit more to the downside, unless we start to see small bars and we start to see volume trail off out here. Pretty good support inside of gold, either at the high of the session at 11 o'clock in the morning. That was on November 14th. That's at about 1179. So that 1179, 1181 should act as pretty good support for Goldilocks. We'll have to see how that plays out tomorrow. That would be a Gartley buy pattern. Gartley buy pattern does not require you to make a 0.618 retracement out there. It just requires an A to B equals CD to the downside or to the upside out here. In this case here, not that it can't get to the 0.618 retracement. That would give you a 1 to 2 A to B equals CD. That would be a nice trade setup, 1160. You just got to monitor it, monitor these bars. But right now, this bar that we currently have says the party is not over. To the downside, you've got, what are we going to call it? What are we going to call that? Debbie Downer. Yeah, so Debbie Downer says it's got more work. And that's not to take away from anybody who's named Debbie out there, by the way. I just, in fact, it's not. It was just Steve-O trying to be cute out here. It does say that we should see a little bit lower price inside of gold before we see that silver, that's not silver, that shiny metal turn around and call it gold metal. Let's take a look at some things here that are moving other than the indices, other than the ETF structure. I think we've covered the areas that you need to be paying attention to in the marketplace. Let's go take a look at some equities and see what they're doing. Let's take a look at Tesla. TSLA is a ticker symbol, off $10, trading out at 247, gapping down this morning. Volume behind the move, 3.9 million shares out here. Tesla, what Tesla did was it actually repaired that window. So Tesla had a gap down with some pretty good volume on October the 10th, 13 million shares to the downside. It repaired that window out there. What does that mean? It means I can really not use that as a level of resistance out there. And that was because of the trading session here on November the 14th as it repaired and it closed that window. You've gapped down this morning. You've got 3.9 million shares. Do we have any signs of any high volume bars down here? Yeah. Unfortunately, Tesla does. If Tesla was in the process, I mean, he's really got the same A to B equals CD. If Tesla ever does fall out of bed, your buy on Tesla could be a test of the May 8th swing point low. That's 20 million shares down there at a price point of 178 even Steven. That's saying it's going to get down there. If you were in Tesla, you'd want to make sure that you knew about that. What you're going to see is you're going to see maybe a little bit of battling out here, some battling at the June 16th, June 17th level, because you had some pretty nice volume to the upside there. That could be your support inside of Tesla, TSLA. Also, the downside, you got Priceline, but it's not off, but a little over 0.6%. No big deal out there. Let's take a look look at Synchronous Technology. SNCR is a ticker symbol. Now, this is gapping down with volume. This is probably coming back to its breakout session from the trading day of July 29, 2014. That had 1.9 million shares. This is breaking down with more volume than that to the downside. So that says that even though it hasn't taken out its swing point here, its swing point, and it had a wide price spread accelerated volume, it's actually, no, it's not created an island out here. That's on October the 28th. This had 2 million shares to the upside. Too much volume. I would say that this is time for this equity to rest. Let's put this on a longer term time frame. Let's put this on a weekly chart just to see if we get any kind of signal out here. And the answer is, Johnny, the answer isn't really get anything. So, all we can see is where this thing broke out. So that gets you to July 2014. That's at a price level about $33 and change. Where did I have it on the daily? Oh, sorry about that. Where did I have it on the daily? And is the high volume high out here first before I switch over? Let's see. No, it's not. Not on the weekly, at least. On the daily, it's saying the price level was in that, it's in that $30 range. So if this thing can pull back with some light volume, by light volume, the benchmark is 1.9 million shares. Ideally, you'd like to see volume really dry out, sellers really dry out. 253,000 shares is what you're looking at a price point of $33.88 to $34.80. But as we speak right now, this equity here is pulling back with volume. And other than seeing that there's one director that sold 4,000 shares or 10,000 shares, really not that big of a deal. Or shouldn't be that big of a deal. That's on Synchronous Technology. Let's see, percentage-wise to the downside, what do we have out here? We've got Bit Auto, BITA is the ticker symbol. Let's go see what Bit Auto is doing out here. This thing here has it's completed its work really to the upside. This has a high volume swing point high. Now, it didn't test the high of that session, which is at 98.28. That's from August 26, 2014, 4.7 million shares. Price moved up into it with 3.8 million shares. Did that on November 14th. Moved again higher yesterday. Lighter volume, 1.4 million shares. Has not tested the high. You're still trading inside that swing point. So long as Bit Auto holds the 88.55 level, really does suggest that 98.28 becomes its next target. Now, there's nothing really wrong about this stock chart. This stock chart looks pretty good to me. In fact, what it actually did was it formed a Gartley buy pattern back here on the trading session of October the 13th, and then we've seen a couple of signs of strength, and a nice one back here on November the 14th. BITA is the ticker symbol. Let's take a look at, see what we got here percentage-wise. You got Splunk, SPLK. Let's go see what it is doing. It's pulling back this morning, 889,000 shares as we speak. This also, how about this? So this has got a sign of strength back here. So this equity, this maybe you got to put this on your shopping list. I'm not saying it'll pull back there. You're at 62.42, but if it ever did get back to the $48 range out here, you've got a breakout that's got 20 million shares to the upside out here. Now, the level was not tested. That's your support one range at $48.55. Support number two would be the top of the gap, the top of the breakout, which is $46.22 out there. Right now it's competing with a little swing point here. It's trying to break out a swing point, and it's going to have the volume today to do that. So a close below 62.17 suggests that is a real possibility. That is on Splunk, SPLK. Let's go look at some things here, moving to the upside. Let's look at Target. TGT is the ticker symbol, up a nice 4.6% out here, gapping up. See what this chart is doing. So Target most certainly off of the lows that were formed out here back on February in 2014. It's trading right into, how about this thing is closing all kinds of gaps out here. So it's doing a lot of damage repair. Looks like Target, which has got 8.3 million shares today, wants to trade all the way up into the July 24, 2013 high. $73.50 out there. Right now you're trading at $70.65. We'll have to keep an eye on this because any disappointing news over the next day or two, you could have an island reversal top inside of Target. TGT, this is Steve Rhodes, TFNN. We'll be right back with this.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Get back, folks. Dow off 49, the S&P down 9, Composite off 36 points, Russell down 14. So Russell 2000 here leading the charge. The DAX is just about to give up all of its gains. She's basically flat as we speak. So let's summarize where we are at here in the market. First thing to focus on, let's go take a look at the VIX index. It's trading at 1467. 50-day exponential moving average 1509. 1509 becomes your line line of demarcation out there. You get up there, you test it, you reject that, meaning you trade lower. Then, nothing more than just kind of your normal garden variety type of moves, higher and lower inside of the marketplace. You close above 1509, not 1510, but you close above 1509, and it says it's more than a garden variety type of retracement that could take place. So that's the first thing that you want to focus on. Pay attention. As we talked about earlier, got the summation indexes, with the exception of the Dow. She has not turned down just yet, but it could by the end of the day. You've got the NASDAQ and you've got the New York Stock Exchange both below their zero lines. That's where you start to see changes in trend. So if the market were to close out the session like this, you'd have your second indication. Now, this combined with a VIX that gets above the 50-day exponential moving average says, okay, that retracement that Stevie's been looking for, that should take us into next week. Not this coming Friday, but really probably next week, could be underway. I'd have to say. You'd have to really pay attention to any kind of reversals out there. But at this stage, that would be its message. So that's what's going on there. If we go take a look at the NQ here, right now you are trading below. Again, this time frame here, this 2-hour time frame, doesn't end till noon out here. So we don't really know if the 42.16 area is giving way as a support level or not. Right now it's under pressure. It's trading at 42.11 out there. So there's an indication that says, okay, beware, and then watch. So that's two. That says at 4 o'clock, if we got two closes below that 42.16 level, that combined with everything else that we're looking at says, okay, more than the garden variety out here. So that's what's going on inside of the NQ. If we take a look at the ES Mini as we speak right now, the ES Mini, she's traded at 2,040. The ES Mini really has to close below 2,039. I say 2,039 and a quarter, but 2,039 right now, that's acting as support. That is a significant support level. If price just rejects that area, that's really the one thing that you can just focus on. Now, if you get all of these, so I'm giving you these guidelines here, these parameters to pay attention to. At this stage, this is just simply acting as support and saying it's nothing more than just kind of a garden variety. I'm going to test you. It's like the universe. The universe is always testing us. And if you'd like to learn more about how to handle those tests, if you'd like to really understand, if you are a person that is, if you're, no matter what stage you're at in technical analysis, if you're somebody that's reading some books, which is a beautiful thing, it's how I immerse myself, but you're really looking for the theory, you're reading this books and you're not totally getting it. If you're confused, it means you're about to learn something. And there's no better investment than the investment that you can make in yourself. And that best investment would be going to the workshop that begins this coming Saturday from 9 to 12. It's my 7-week trading, mentoring, coaching course out there. That means we have a 3-hour workshop on Saturday that'll be archived. Be on your members page come Monday. We've got 7 weeks together to go through patterns, answer questions that you have so that you actually get this. It's the live series approach is what I call it. And then on January 9th, we'll reconvene as a group on a Friday during live trading from 9 to 12 as well out there. So if you're looking to take your trading game to the next level, because you too have got that same curiosity that I had when I began this, and this is the workshop for you. Because I want to teach you, I want to help you condense a lot of that reading material, just get you to focus on what you need to focus on. Folks, have a great Wednesday. Stay tuned. Our man Basil Chapman is up next. Stay warm out there, and I look forward to seeing you tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.